This is Rick Rule for Rule Investment Media, sponsors and producers of the Natural Resource Investment Symposium in Boca Raton, Florida, this year, July 23 through July 27th. I'm delighted today to introduce a fairly new friend to me, Sandeep Singh, a returning sponsor to the Natural Resources Investment Symposium and CEO of Osisko Gold Royalty. First of all, Sandeep, thank you for subjecting yourself to this interview and also for your ongoing sponsorship and support of the Natural Resources Investment Symposium.
Oh, it's my pleasure, Rick. And yeah, new, but we certainly appreciated the conference in Boca Raton last year. We're looking forward to this year's event. It was quite helpful, so quite useful. So looking forward to continuing that effort.
We attempt to integrate the educational lessons taught at the Rule classroom with the conference, and we've tried to teach people at the Rule classroom how it is that they can interrogate and interview CEOs. And the purpose of this is to allow people to identify opportunities that they wish to pursue, at the conference. So to begin with, tell me something about the establishment of Osisko Gold Royalties, the history up to now, and tell me something about your background and frankly, why people should care what you have to say and what you have to teach them.
Yeah, fair point. All that makes sense. Look, the Osisko Group, I'm sure is kind of well known to many of your audience, maybe not all, but this is the group of founders that found, built, and then sold what is still one of Canada's largest gold mine, Canadian Malartic mine in Quebec. And in 2014, when that business was sold, Osisko Gold Royalties was born and spun out to investors on that day. At that point in time, there was only 5 royalties in the entire company, one of which was producing on that flagship mine. Fast forward to today, there are 20 different producing assets generating cash flow for us in a basket of 180. So the company's grown in size, relevance, diversification, all the positive things that have kind of stemmed from that portfolio that was built largely in a down tick market. Most of those assets were acquired when gold was between $1,200 and $1,300 an ounce, and now our shareholders are benefiting from that at much higher prices. That's a bit of the background of the group. I joined it after a 17-year investment banking career in mining. So basically doing what I'm doing today, which is allocating capital, doing deals. And I had been an advisor to the company for most of that period. And then at the start of 2020, just in time for the world to shut down, I joined and took over from the founder to run this business for the next wave of growth. So that's a little bit about the history of the company and my how I came to join it.
Fast forward to today. Tell me something about the principal assets in the company, and tell me. We'll do the growth. We'll do the growth later. Tell me something about the foundation of the company, the principal assets of the company, the financial structure, that type of thing. Make the investment case, I guess, is what I'm saying.
Sure. Well, the foundational asset, the flagship asset for the company, is still what it was back then, 8 years ago. It's the 5% royalty that we have on Canada's largest gold mine, run by one of Canada's largest companies. So we get 5% of the ounces every year from Agnico Eagle's Canadian Malartic mine. They're, as I said, a $35 billion senior. It's one of their 2 flagship assets. 1A, 1B, you can decide, but it's one of their 2 most important assets. So great place to start the day, where our primary asset is of that importance to one of the biggest companies in the world, one of the best regarded companies in the world. But we have a number of other significant assets where we derive revenue, top line revenue, from some of the best partners in the mining space, companies like Capstone Copper in Chile, companies like Victoria Gold in the Yukon, Alamos Gold in Ontario. So you go down the list, we're partnered with some of the best operators, and importantly, we're partnered with them on some of their core assets, either flagship or in the top handful. And the reason why that's important in the mining space, or in the royalty space, I should say, is after we take on our exposure to these assets, everything that comes after that, we get for free. And there's a lot of history of, if you pick your assets well, they end up going a lot longer than you expected. That's what built the Franco-Nevada business. And we're seeing a lot of that positivity play out. One example at the top of the register would be the underground that's come to pass at Malartic, where Agnico has now extended the mine life of that flagship asset for us by multiple decades. But if you go down the list of assets, which I'm sure we will in a longer setting in Boca Raton, I think your listeners, your followers will find a lot of positive assets, a lot of catalysts within that portfolio.
I would
In
encourage
terms of
listeners
the,
of this. Go ahead. I'm sorry.
sorry, go ahead. No, I was gonna. You asked me also about the investment case, and if I can just give it to you in 60 seconds, and we can go down any of those paths you might want to go down. But essentially, the Osisko Gold Royalty story is one of very high quality assets. I really just touch, scratch the surface. But if you look at our assets, starting with Malartic and going down, they're phenomenal, high quality assets where we get gold and silver. They're going through a sustained phase of growth. We had 80,000 ounces, then 90,000. This year, we're expecting over 100,000 ounces delivered to us at a 93% margin. So they're growing, and they're growing on assets that we own outright. So we're growing for free going forward, and I think we expect that trajectory to continue well into the back half of this decade. It's also lower risk. So because of the business model, because we don't have operating costs and capital costs, we're not subject to the whims of various governments like the operating partners are. It's just a much lower risk way to get your gold exposure. And then the last piece of it is the upside. As I mentioned earlier, we have all the free upside after we take our investments. So it's a high quality portfolio, which is growing, a lower risk way to get maximum exposure to the gold price. And we think that's pretty compelling.
So now let's focus on two different aspects of what you've just said. Obviously, the royalty and streaming business is attractive. I would encourage listeners of this to go to the Rule Classroom and review our royalty and streaming lesson. But it's important to note, as you said, a 93% operating business. In effect, your gross is your net. You don't have the capital cost exposure. You don't have the operating cost exposure. You don't have the social rents to the extent that mining companies do, which is attractive. What I'd like you to do is talk a little bit about the growth potential of your existing assets. And then I'd like to talk about any differentiation or durable competitive advantage that Osisko Gold Royalty might have versus other players in the space.
Sure. So on the growth story, first and foremost, I mean, like I said, that growth is real. It's happening in live time. To go from 80,000 to 90 to 100, basically a 10% CAGR growth rate every year. And we forecast that by 2027, if we add nothing else to the portfolio, that will continue to grow at about a 9% rate per annum to the point where it reaches 130 to 140,000 ounces at the same type of margin in 2027. So we don't see any slowdown in that growth. We collected a serious amount of assets in the last downturn, and they're now coming to fruition for us. Put differently, as I mentioned to you today or earlier, 20 different assets generating cash flow for us. Half of them are going through meaningful expansions or ramp ups. So these are generally long life assets, and they're getting longer. They're big assets, and they're getting bigger. That is the foundation of the business, and that includes our top 3 assets by value. So to have that level of longevity and positivity on our anchor assets, the foundation, if you will, of our business, and to that, every year we have new assets coming online to our portfolio for free. That's a great growth story to have. And we're not a microcap company growing at a 9+% growth rate. We're a $3 billion business growing at a 9% growth rate that is sustainable. So that's a phenomenal growth story. And that's really if the assets stood still today. And as you mentioned, that's run by a 27-person team total, which includes the receptionist and our admin assistant. That's everybody we need to continue to grow this business. That's if the assets essentially stood still. We had our 6th year in a row in 2022 where we had 1 million meters or 3 million feet drilled on our properties by our partners. And that's really the R&D, if you will, of our business. That is our partners investing in the future of their businesses, not necessarily looking for the next 10 years of resources, because they already have those in many cases, but where's the next 10 years of resources and reserves beyond that? And to have that level of work, which I would argue is more work than Newmont or Barrick do in any given year on their properties, being done on assets that we have exposure to is phenomenal. And that's the effort. The outcome that stemmed from that is equally phenomenal. 2021 was a year where every ounce that came out of the ground for us was replaced 9-fold by our partners. Last year was a year of material improvement in those ounces, replacement, but again, material improvement in confidence levels, basically ounces going from inferred to M&I to reserves, which are the most credible ounces that you can have. So we're seeing a growth rate that is sustainable and high. If if the assets stood still, we're also seeing that those assets are not standing still. Our partners are doing great work on them. And as I said earlier, long life assets generally are getting longer, big assets are getting bigger. New stories are popping up into the business. So that's essentially a bit of the growth story that is Osisko Gold Royalties.
Yours is a
you asked
crowded
about
space.
the.
Yeah.
Pardon me.
Go ahead. Yep.
No, I didn't catch your comment.
No, I just said go ahead. I want to hear a bit about what you see as your advantage in a crowded space.
Yeah, sorry, that I was going to get to the second part of your question, and it's a fair question. There are larger incumbents in our space, companies that are 8 to 10 times our size. Everyone, we don't have a monopoly on talent and smarts and hard work. There's other people doing good work. The good news for us is the pie is increasing. We're at a point where gold is still flirting with $2,000 an ounce, yet the equity markets are drying up for the operators. Credit is, for the first time in my adult life, not free or basically free. Debt costs money all of a sudden. We still have the lowest cost of capital. We still have the ability to fund the sector as we always have. And I would argue our capital is more needed now than at many points in the cycle. So we're seeing the pie, the number of opportunities grow. As I mentioned, our disadvantage, if you will, is that we're competing with companies 10 times our size. Our advantage is we have that organic growth. We got the last part of the cycle correct, so we can grow if we do nothing, which gives us a lot of discipline and patience in terms of picking the right spots. And last year, we deployed a moderate amount of capital that, in essence, when those assets come into production, some immediately, some in the medium and longer term, they will add double-digit growth on top of already organic double-digit growth. So we're a size of business where we can rely on our relationships, our hard work, our access to proprietary deal flow, and continue to move the needle on a right-sized business, as opposed to needing to do billions of dollars of deals in a larger cap name to do the same.
One of the value propositions for us at the forum is that we've never allowed an exhibitor that we didn't own. And we like to deliver to our attendees a fairly curated educational experience. Those attendees who would like to learn more about your company before they come to the seminar, tell me what the sources are. Tell me in particular what living, breathing human being they should contact and how they might reach him or her to generate the sort of curated experience that the seminar would ask its exhibitors to have.
Well, I for one, am not an AI creation. I am a living, breathing human being, so they are welcome to reach out to me and our team. We've got, I'll be joined again in Boca Raton by our VP of Sustainability, a woman named Heather Taylor, who some of your listeners would have met, and by our VP of Capital Markets, Grant Monting. So we are the trio that will be at the conference. You can reach out to us on the website. There's a info email address. You can reach out to that. At the bottom of every one of our press releases, their email addresses and phone numbers are available. You can reach out to them more directly. We look at all those sources, and if someone wants to speak to me, I'm happy to get on the phone or respond to an email as well if they want to hear it from the horse's mouth, and look forward to the opportunity to do the same in person. It's interesting. You use the word curated. I often use that term to describe what we've done. We have basically, for an audience, hopefully like yourselves, and hopefully they see value in it, but we've taken a little bit of the guesswork out, maybe done the same role that you do in terms of curating an attendee list, but gone out and cherry picked high quality assets that we've done the diligence on. From that, taken the top line revenue, so the safest component of it, and created a basket, a portfolio of those names, and offer that to investors or would-be investors in the form of Osisko Gold Royalties. So I guess in some ways we're doing the same thing. We're certainly happy to be part of your curated list, though, Rick.
Well, the answer was the best possible answer, which is to say the best contact is the CEO, somebody who is dedicated enough to his business that he'd like to talk about it, and respectful enough to his partners that he lowers the cost of capital. Sandeep, thank you for your dedication to your business. Thank you for agreeing to today's interview. And thank you personally for your ongoing sponsorship of the Natural Resources Investment Symposium. I'm delighted and proud to have you with us.
Likewise, it's we're doing it because it's a very good use of our time, and we appreciate your support. So thanks so much, Rick.